Wyoming Capital. Mr. Olayinka, good morning and thank you for joining me this morning.
Good morning, Nancy. Thank you for having me.
Okay, let's get started, and I think I will begin by asking you the question of how does the market feel about the Nigerian Exchange Group PLC completing its listing by introduction of about 1.946 billion shares. I remember we've been talking about this in the last few years, for over 10 years now, or even more than that. When will the exchange be listed on itself, so to speak? So it's been a long journey. You're seeing companies like Airtel Africa, MTN Nigeria listed. So this is a journey of over a decade. So how does the market feel about this?
Market was quite, in fact, the mood was very positive. Market received it, with all its hands. Like you rightly mentioned, this was something that had long been expected, but never happened until that until what we saw last week, Friday, when it was listed. So market was actually happy that finally we now have NGX shares now listed on the platform of Exchange Limited. So it was a positive reaction, and we saw that in the way investors took more of the shares from the market. In fact, as of this morning, that particular stock is leading the share price with almost in fact with more than 9% gain right now. And so in fact it was a positive reception for that particular listing. Market was happy, and the mood is still very positive as at this moment.
Okay, who are the category of investors that are buying this share or this stock this morning? What are the category of investors? Because as I looked at the share price last Friday, the NGX was listed at 16 naira 15 kobo. It gained, I think, 1 naira at the close of the day. 17 naira 15 it finished. Now you're saying that the positive sentiment is still continuing. Who are the people that are really buying this stock?
Most likely to, well, I cannot give you exactly, the investors that are actually taking interest in that particular stock, but I know for sure that, some license holders will show interest. We also see, I mean, we have seen, some, institutional investors and high net worth individuals also coming into that space. So clearly, the entire market is actually in the mood of actually, taking in that stock. And for now, we have it as the one with the stock with highest volume and the best price. In fact, as at this moment, like I mentioned earlier, is having about more than 9%. That's the gain. That's the gain from last Friday.
Okay, speak to me about how the market also feels, or how it felt on Friday after the inflation numbers was announced by the statistician general Simon Harry. We did break it here on the program. It was announced just before I ended the show. Inflation, headline inflation, dropping to 16.63%. Did that news filter into the market at all? And if it did, how are stakeholders and market watchers looking at this data?
Market received that the news of the continued slowdown in inflation rate. Market was actually happy with that, and we saw that in the closing prices that we had. For instance, ASI last Friday closed at about 1.75%. That was a very strong positive sentiment. The signal was that yes, inflation is trending down, and as much as we have that, that will also improve, consumers' purchasing power, and investors also have, something to put on the table, especially, to play the market as well. But don't forget also that there have been other positive news apart from the inflation number that we saw last year. That was released last Friday. There have been some positive news around the economy, especially what happened during the what's it called, the Eurobond, Eurobond that that federal government offered to the market, to the international market last week. I mean, some weeks back. That the oversubscription of that particular Eurobond, already gave indication that there are investors out there waiting the wing. We have investors from local, from the local market. We also have investors from foreign market showing interest in Nigerian economy by way of wanting to invest in dollar-denominated instruments, because we saw that apart from the foreign investors that showed interest, local investors with offshore funds and local dollar balances also participated. So those are strong signals that investors are actually looking at this market, but they want to come into the market when they have assurance that they will have a more stable exchange rate. So we saw that, and so that's an indication that that was what brought most investors out from their share to say, oh, so we have these investors out there waiting in the wings. Let me not wait for that. And that was what we saw in the market last week, and what is still going on as at this moment.
Mm. From what you're saying right now, should I deduce that at the end of today's trade, with the positive sentiment that is currently on, that the markets will finish in the bullish territory?
It is very likely, because we also saw last week that each time traders, those who speculate in the market, who take advantage of who always like to ride on bull and bear, we saw that each time they try to strike by taking profit, markets recover very quickly, and so they find themselves booking losses. So they seem to be playing down on that on that their strategy, and I think that market is good for it. So we will see investors, or especially traders, taking profit, but we'll see market rally around around the happenings in the economy. So clearly we may still see positive outcome today.
Which stocks do you think might drive that positive momentum this week, especially given a potpourri of the news that we've been getting, at least in the last few weeks, and as we gradually go towards the end of the year? Which stocks do you think might drive positivity this week?
Okay, if you have followed it very, very closely, you see that FVN holdings have actually lifted the market in a way. There have been some kind of special transactions in that particular stock, and those transactions actually also attracted investors' interest, to say what is actually happening in this market. Why is FVN moving this way? But we have, with those movements in FVN, we haven't seen remarkable movement in other banking stocks. So we will begin to see other banking stocks being, positively repriced to also, show up in their value. So for that, there are still some banks that have not moved at all. For instance, Zenith is still very highly underpriced. We see GT, made some, made a good move last Friday, but maybe we'll still see moderate move in that particular stock. There are still some other stocks that, EcoBank, for instance, released this result, which was positive. So we will see movement in some banking stocks that have not moved at all, that haven't moved significantly. But we begin to see movement in there because of relative pricing of securities that normally take place when you see some other stocks that of comparative value moving ahead of them. So we'll see movement in Zenith, GT, UBA, Access Bank, and EcoBank I mentioned, Eco Transnational I mentioned earlier, and we also see in the blue chip stocks, we'll see movement across board. That's what I expect for the market.
Okay, let's take a look at the budget 2022 proposal that the president did bring to the National Assembly, I think 2 weeks ago. I hope that the market has fully digested at least some of the budget proposal. Is there anything that the market is taking away from that budget proposal for 2022, especially around sectors that the federal government is interested in, especially around the debt market, especially even around the capital market, because the president did say that we don't have any option right now than to borrow?
Yeah, quite frankly, anytime we have an expansionary budget, market tends to react positively, because that means that apart from the fact that government is not able to generate sufficient revenue, from activities, is ready to also borrow to fund those infrastructure, to fund those important aspects of the economy. So normally, anytime we have expansionary budget, market tend to react positively, especially when it is clearly stated that the government will borrow from the international market as well as from the local capital market. So market is actually preparing for that, and market is already used to funding government deficit through debt issuance and some other activities. Of course, we know that they will also be doing some PPP projects. So all those things will come into the market and create those positive vibes. So clearly, market is actually thinking ahead of that, and market will gladly receive whatever government bring up to fund its budget.
I guess the market will not refuse any form of borrowing. The market would always be happy about that, because it also keeps the market active, especially at the capital markets area. But let's talk about the 9 months earnings that perhaps the market is expecting from companies quoted. What do you have to say about it? Are there companies that we are looking forward to, presenting stellar performances in the 9 months period? Are there also companies that perhaps investors are waiting to, get into it, perhaps when they do see how they've performed in the last 9 months?
Yeah, from the trend we saw in the half-year result of most of these listed companies, positive result from some of them, and we hope that that positive outlook will remain. The third quarter results will be positive for most of the banks, but there have been more activities for the banks. We also expect to see good results from the cement companies, the Dangote Cement, the Lafarge Waco, and the Bois Cement. We expect to see some good outcome from their results, from the third quarter results. We are also hoping to see good results from flour mills. There, quite a number of them that really did well in the second quarter will maintain that trend in the third quarter. So we are not going to reduce our focus on some of these companies, especially those of them that did well in second quarter. We are also expecting good results from MTN. We are, in fact, Zenith particularly, that company has been very positive, although it has not been favored in its pricing. So we expect to see positive results from Zenith as well. Quite a large number of the banks will actually come up with positive results. So we are hopeful that, and that is also shaping sentiment in market already. So we are hoping to see positive results in those banks, and of course in those other sector companies.
Which, if I'm an investor in the stock market right now, at this time of the year, what kind of investor do you think I should be, or what kind of player? Should I be a dividends player, or should I be a growth player? What do you think? Or a value investor?
Well, it depends on the interest of the investor. Normally, anyone who's interested in income generating stock will normally want to line up for those stocks that the companies that normally pay dividend at year end. And so those ones also have a way of even driving growth in their share prices. So those companies that will pay dividend will have positive sentiment throughout the year, and of course in 2022 we will see the same positive movement in those stocks. And so anybody who's actually looking for growth in Nigeria companies should also consider those ones that actually that have capacity to pay very reasonable dividend, and we have that in banks: Zenith, GT, UBA, Access, even Sterling Bank. All these low cap banking stocks are also doing well in the end of dividend. So then of course Danksem, MTN normally pays dividend. I've no doubt about that. That has a policy of 80% payout. And so if you look through all the liquid stocks, those very liquid stocks, we expect that they will be able to pay dividend, and those ones should be considered by investors. Even if you are looking at a growth stock, some of them are actually growth stock, but they still pay dividend, and they pay good dividend, even though their payout may be less than 40 or 30%, but it's still something to entice to excite investors. So I think either you are looking for growth stock or you are looking for income stocks. It's always better to pursue it from the angle of stocks that are actually companies that are actually paying dividends, because that helps to also accelerate their share prices. Fine. You can also look at some other stocks that are completely growth stocks that don't pay so much dividend. But of course, we have also seen that in the behavior of share prices of some of these banking stocks and real sector stocks like Lafarge, like Danxem, MTN, some of these real sector flour mills. So all these stocks can also be taken as growth stocks. Even though they still pay dividends, you can take them as growth stocks. So it's a good one for them too.
Okay. Okay, you've talked so much about perhaps where investors should, put their money, put their monies right now. But I want to ask this very tricky question, or let me play the devil's advocate. Where should I not invest my money right now?
Well, a company came up with a third quarter statement of affairs, stating that it's still having challenge, operating in this environment. So rather than we come up with with the third quarter result, it came up with the third quarter statement of, I think that is Austin Last or something like that. So you cannot go near such company at this time. A company that is not able to operate, don't go near them. Those penny stocks that those companies with penny stock that have not been able to pay dividend over the last 5 years. If some of them are growing, but if your objective is income driven, you do not need to go near those stocks. Any stock any company that has not paid dividend in the last 5 years, I would advise that no investors that is looking at income should go near there. But that does not mean those companies are also not doing well. They might be doing well, just like rightly mentioned the other time. They are growth stocks, but they because of the fact that they are not able to raise money from the market immediately to further increase their capital base or to fund their activities. They tend to actually plow by their profit. So some of those companies, if you are looking for income stock, you don't need to go near there, and they are mostly in low cap stocks, especially those ones they call penny stocks.
Okay, let's go back a bit to inflation, because I did ask you that question earlier, how the market feels about this downward trend in inflation. But my question to you right now is this: the inflation, headline inflation, 16.63%. Which stocks do you think are vulnerable right now as a result of high inflation? Do you think that which stocks perhaps, which cyclical stocks perhaps, because cyclical stocks are stocks that are really affected by the macroeconomic environment and, perhaps what is also happening in inflation. We're seeing inflation high, though it's moderating, but wages or income is not growing. So which companies and which stocks do you think are vulnerable right now with this high inflation?
Nancy, let's understand one thing. That's the beauty of the equity market. Equity market adjusts with inflation, and it adjusts over time. In the short run, some of these firms and listed companies are expected to adjust to the realities in the market, especially the realities in the economy, how the inflation is treating them. They have to adjust. So you see them adjust their prices. So those short-term adjustments is still there. But in the long run, when all factors become variable, these companies must recover all costs. And these costs are also reflected in inflation number that we see. So most listed companies and most firms generally adjust, to dictates of inflation. So they are not pressed down by inflation. Rather, they adjust to inflation and make sure that they recover all their costs. No matter whatever cost any company incur, except the one that said it's not able to operate. That one you can take it out. Of course, it's not going. You can't beat inflation. But most other companies, most listed companies, even with what we saw in the last 3 months, have been able to beat inflation hands down. So with inflation trending down and with stock prices moving up, and of course with moderation we are seeing the yields, you know, in the yield environment in the fixed income market, we will expect that listed companies will going to adjust to inflation numbers from time to time. So for equity, any day, any time is a good buy for those who have long-term horizon. It's only those who are thinking in the short-term space that may not need to go near equity for now. But if you are thinking long, you know that you have the appetite to hold for more than 1 year. Equity is the best stock to take for now.
Okay.
It beats inflation hands down all time.
But I think that will depend on if you are able to get a basket of equities in your portfolio so that you can readjust. And you must have financial advice to do that. Am I right?
Yes, of course. You cannot pick, if you are looking at beating inflation, equity does it better. Maybe not in the short term, but if you look at long term, equity does it better. And if you want to have a balanced portfolio, it's also good to take fixed income securities, especially those high yield government securities. We have seen that there is more bullish sentiment, at the long end of the curve. So those who can afford to play in that market should also take it as part of their portfolio. Those government securities that are those 2030, 2050 government bonds still pay better yield compared to those ones that are maturing in the next 1 year, which are already trending down there in the yield curve. So I think you can have a balanced portfolio. You can also, even as part of the portfolio, bring in you can bring in property, some investment in the area of real estate. You can also do that as well. So you can take cash, just little cash. Then you also can you can have the fixed income, especially government securities, because they are risk free. They are default risk free, even though interest rate risk is always there. But as for default, you won't have any default there. So the fact that the interest rate risk is there means that you just take part of it and also say put a portion of the portfolio in equity.
Okay. Thank you very much, Mr. Olayinka, for your perspective.